U.S. natural gas prices started the week with a strong downward move, with NATGAS trading almost 4% lower. Forecast for warmer weather in the United States in the near future is pressuring natural gas prices as it hints at lower demand at the beginning of the heating season. Gas prices have experienced 3 consecutive weeks of decline, excluding positive rolling, attributed to an excess of gas in the system. Gas inventories were reduced later this year compared to previous years, linked to exceptionally high temperatures in the United States. Additionally, El Niño may keep gas prices in the negative territory, as it causes higher temperatures throughout the year in the US. The average production in November is currently at a record 107 billion cubic feet per day, up from the previous record in October at 104.2. JP Morgan indicates that for the next 6 months and likely in the upcoming summer season, the narrative should point to a clear oversupply in the gas market. The United States is on track to become the leader in liquid natural gas exports globally. Nevertheless, the supply within the country appears to be excessive. If gas inventories continue to decline in the coming weeks according to the seasonality, prices may fall to the range of $2.75 per million British thermal units, MMBTU. On the other hand, if the reduction accelerates, a scenario of a 10 to 30% rebound is possible, similar to what occurred in the first half of December 2022. Subscribe to XTB to stay up to date with the latest trading and investing news.